This is Steve Colano, and this is Confidential Remarks. You spend years saving for it, analyzing neighborhoods, and watching interest rates. But the moment you actually enter a real estate transaction, the financial reality of what you're doing fades completely out of view. It is a stark contradiction. You will likely spend hundreds of thousands of dollars on a single purchase, yet you execute that transaction with less data and less transparency than you get when buying a 10-year-old used car. You are immediately faced with a choice. You can surrender the process to the industry for the sake of convenience, or you can take on the mental friction required to educate yourself. The industry relies heavily on that first option. They market a stress-free experience because a buyer or seller who just wants the paperwork handled is vulnerable to the machine's hidden mechanics. Choosing convenience over understanding acts as a blindfold. It hides the actual cost and the alternatives that might have better served your goals. People often claim the real estate industry is broken. In reality, it functions effectively for its primary goal, transaction velocity. It is designed to move you from prospect to closed deal as quickly as possible. This diagram shows the standard consumer journey. An average buyer or seller steps into this pipeline locked into a single rigid track. You are guided through a predetermined sequence. You secure the agent who leads you to their preferred lender, who then directs you to a chosen title company. Notice the branches at each stop. When vendors operate in closed loops, back-end referral fees and a lack of price competition can keep costs high. This siphons equity away from the transaction and into the pockets of the intermediaries. This sequence is structured to minimize your resistance. By keeping the choices limited, the system protects the profit margins of the people managing the deal. Reclaiming control requires deconstructing these incentives to see where your money is actually going. Understanding how this pipeline operates is a mandatory first step before signing a contract or committing your capital. Let's look objectively at how the people guiding you through this process are compensated. Standard agent compensation is built on commission structures. These are specific mechanisms designed to prioritize the speed and volume of the industry. In this matrix of systemic structures, the commission model maps directly to the system's goal: maximize price and velocity. The higher the price and faster the close, the better the system performs. For the consumer, this introduces a specific risk of steering. An agent's payout is mathematically tied to a higher purchase price and a faster closing timeline. This incentive can conflict with your need for patience and objective negotiation. You avoid upfront hourly fees, but you do so by sacrificing the guarantee of neutral advice. Relying on this traditional model means your timeline and your wealth may be secondary to the speed of the transaction. The industry also maintains leverage through information asymmetry. By guarding market data, the system keeps the consumer in a dependent role. If you only see the data your agent chooses to share, you enter negotiations in a reactive posture, unable to verify the information used to make decisions. Avoiding your own market research offers short-term relief, but it often leads to a loss of leverage when it matters most. This loss of leverage is reinforced by structured pathing, where clients are handed off strictly to a net partners. This funnel illustrates the result. You are moved between pre-selected services, inspectors, lenders, and title companies, effectively walled off from the open market. While this path is convenient, it limits your ability to compare costs or negotiate terms with outside vendors. Outsourcing these choices transfers your financial leverage back to the network. There is an alternative approach to this pipeline. We call it the open access framework. On one side, the rigid single-lane road of the status quo. On the other, a path offering distinct directional choices and variable options. This transparency comes with a trade-off. Navigating this path requires a significant investment of time and cognitive effort up front. This framework does not provide shortcuts. It is designed for those who want to examine their options rather than have those options chosen for them. Aligning a transaction with your long-term goals requires taking responsibility for the decision process yourself. Control over your decisions is an asset, but it is one that requires the friction of education. Choosing a path depends on your willingness to engage. We can map this to two distinct consumer profiles. On the left is the delegator. This person prefers the traditional pipeline, seeking shortcuts and validation that the system handles the details. On the right is the optimizer. They utilize the framework, seeking clarity and accepting the responsibility of informed choices. The delegator receives a totally hands-off experience, but they do so while accepting the hidden incentives of the traditional system. Identifying which path you are willing to take determines whether you are the architect of the deal or merely the product of it all. For the optimizer, the framework provides the structure to build a custom path based on the specific scope of their needs. This approach unwinds the massive complexity of the industry, creating a direct line of sight into every choice. A custom path relies on neutral data, removing the partner incentives that usually influence which vendors or agents you select. By identifying risks and costs before they're finalized, you can remove sales pressure and move forward with an understanding of the trade-offs. Success in real estate isn't found in a broken or working system. It is found by maintaining the authority to direct your own wealth and your own future. This has been Confidential Remarks.